So this stream will just be about reviewing this week's price action and how to basically take this week's price action to help us adapt for the coming weeks, as well as some entry techniques for this market. So this week's price action was definitely quite insanely volatile, especially just due to how Tuesday and Monday did not actually form the high or low of the week. So you can see that the high of the week was formed on Thursday, and the low of the week was formed on Friday, which is quite unprecedented in normal market conditions. I think there's stats about like 80% of the time highs and lows are formed within the early days of the week, so Monday or Tuesday. So for where Bitcoin is at right now, we definitely had quite a sharp correction in the past 2 days. And in fact, a lot of it happened within just a single day. You can see that this candle was down 8% within a single 4-hour candle. And 8% is a 6,000 point move, which is definitely nothing to scoff at. And pretty much where it stopped was on the Monday low. So after it swept out the Monday low, it bounced a bit and then swept out the lows again. And then that's when we saw the more substantial bounce. So the takeaway from that is trying to catch the bottom and entering too early can definitely be quite dangerous, because you could enter here, and then if you don't quickly take profit, then you'll get stopped out again. So just the question of how do we actually find an entry technique in this case. And definitely the first thing is that it requires quite a lot of patience. So usually there's a clearer picture on the higher time frame charts, like the 4-hour at least. And on the 4-hour chart, the stronger sign of a reversal is an order block being formed. So a red candle before a market structure shift to the upside, right? And then this order block being held as support. So that is pretty much the entry point here. You wait for a red candle that aggressively dips below the sell side liquidity, gives a very strong buyback and bounce to the upside, right? This confirms the order block. You mark out the order block and you patiently wait for a retracement into the order block. So that's how you sort of trade these higher time frame sort of reversals, rather than being too focused on the lower time frames and getting chopped out. So if we actually switch down to the lower time frames, right? We have this low here, this initial sweep, and what seems to be quite strong buyback, and then the price crashed down again. And this might seem like a small move, but it's actually almost 5% and a 3,000 point move, which would stop out most people. So switch to higher time frames, wait for an actual confirmation of a bottom being formed, right? Which is generally an order block and retracement into it that gives a strong reaction. So for where Bitcoin is at right now, I do believe the bottom should be in for at least the next couple of days. The weekend should be green as well. The order block was retested successfully and gave a strong reaction to the upside, which was around 4%, 3,000 point move. So that confirms the level, and we can probably expect Bitcoin to keep moving up over the weekend and perhaps over the next week as well. Another thing to note is, how do we actually anticipate these massive downside movements, right? And usually a tip I would give is that we can expect early week lows in a bullish environment. So on Mondays and Tuesdays, usually we can expect to see the flush out, and then the rest of the week we see continuation to the upside. But obviously this week was an exception, so it was definitely harder to prepare for that. But pretty much the same tips apply. Keep a close eye on the funding rates, which you can check on CoinGlass. and watch for extremely overheated funding rates beyond 0.1%. Not 0.01, but 0.1%, 10 times above the neutral funding rate. That usually indicates extremely overheated environment, a lot of leverage to flash up, and usually in a day or two we see a strong wick to the downside that flashes out all of these long positions. And then only after that we can see continuation to the upside. Another sort of sign of reversal as well, you can kind of use market structure as well, but note that it can give a lot of false signals, especially on lower time frames. So like for example, on the 1 hour, we have this low here that was broken down, but price came back up. So for market structure, it's usually better to use the higher time frames. And also just using higher time frame PD arrays like fair value gaps and order blocks. So one way of confirming this downside move was on the 4-hour chart. We got a break of structure with displacement, meaning a strong red candle that broke below a previous low, swing low at 71,700, that left behind a fair value gap. Right, and even better if the price comes back up to fill in the fair value gap and reject back down. But obviously it's easier to identify this in hindsight. It probably wouldn't be easy to actually enter into that long position from there, but that was pretty much just what happened. Newbie suggests that we could also test the trend line and dump. So yeah, I did draw out this trend line right here. The reason I did so was just to indicate how trend lines sometimes work in these conditions. So depending on how you drew the trend line, the price would have made a substantial bounce of it, so around 68,600, and bounced about 3,000 points to the upside. Right, and for a lot of traders who have this trend line, they'll just enter in a long around here and then just get stopped out when it comes back down. So trend lines is just another way for market makers to gather liquidity. So be careful with using them. A good way to use them though is just to keep them in mind as a downside liquidity target. So we have these lows here, trend line. So price breaking back down here was definitely a flush out of long positions. And depending on how you draw this trend line, you can also view this as a break and retest. Though I think this is probably on the lower probability side, in my opinion. I think we should see continuation upwards for the next few days. Another thing to note as well is a lot of people are hunting altcoin positions because Bitcoin hasn't been presenting many setups, especially like when it just keeps going up and doesn't present any entries on retraces and things like that. So an important thing to remember with altcoin setups is like even if it's an extremely good setup, the timing of it often matters more than that. So if you time the altcoin entry to be like right before Bitcoin flashes down, then the setup will fail no matter how strong it is, and that's because the whole market does move with Bitcoin. So it's important to always have your eyes on Bitcoin and just the wider market as well, trying to anticipate these sort of flash outs. Just give me a second. I'm just going to check the stream permissions. Alright, let's continue. So let's discuss a bit about finding trades and entry techniques. So obviously when we're trading, we want an entry that gives us an immediate move upwards if possible, no drawdown, and we don't want to be sitting in a trade for too long, because if we are stuck in a trade that is just going sideways, then it increases the chance of a Bitcoin flush out, ruining the setup. So that's why it's important to try to catch these coins that move quickly if we can. So one way of doing so is entering after a leverage flush out. So last stream we discussed about these flush outs, these sudden movements to the downside, being an entry opportunity. And the logic behind that is there's like a very good reason why these flush outs happen. It's to take out all of these greedy long positions before initiating the pump. So using that logic, we wait for a flush out and then we hunt for these entry opportunities. So on Cyber here, for example, we have these lows here that was swept out by a flush out, followed by a strong buyback. Right, so step 1, flush out of leverage. Step 2, strong buyback. And then after the strong buyback, you want to see bullish market structure and order flow. So what that means is instead of the market chopping around, you want to see it actually making higher highs and higher lows. And also for bullish fair value gaps to be respected. Right, so when you see such a clean setup like this, it's definitely indicative of a imminent move to the upside and basically just clean bullish price action. And then once it breaks above a previous high resistance and keeps going, that's when we can expect continuation, and we can expect the move to be quite strong overall. Right, if we compare that to previous trade early in the week that did not play out, the difference was the altcoin was unable to make its strong moves to the upside before Bitcoin suddenly did the flush out. So that's why we try to do as much as we can to ensure there is bullish market structure and bullish order flow. But this brings me to my next point is another entry method is using inverted fair value gaps. So as we know, fair value gaps can act as support and resistance. So this one here is a bearish fair value gap that we expect to act as resistance. And once price flips above and breaks above, that's a sign of resistance being broken. And if price continues to hold above it, it's indicating a resistance support flip. Right, so to make it clear, we first get a flush out that sweeps out the lows and all the previous long positions. And then we see signs of a strong buyback and change in market structure and bullish order flow. And then we look for a bearish fair value gap that gets inverted. So basically it gets broken above and the price holds above, and then we enter after that. We try to catch the continuation move as it is progressing, rather than trying to anticipate it, rather than trying to catch the bottom and just sitting around for a few days before it starts moving. Right, and also market structure shift refers to something like this. So price previously in a downtrend or sideways movement. Market structure shift refers to the price breaking above previous highs and then forming a higher low. So breaking above this previous high is the break of structure or market structure shift. Right, and one way to enter the trade is to basically enter after this break, so any point around here, to try to catch the continuation move to the upside. Another entry technique that I wanted to discuss, a bit more risky, but has a few benefits, is to basically mark out a low on a lower time frame chart, and then just enter after the low gets swept. Right. So, for example, on AVAX here, this coin has been very strong over this week. Right? We can see that it has exited consolidation and sideways movement and initiated the movement to the upside very quickly. So we saw how it went up 50% this week. Right, so that's one prerequisite, is that the coin must be in its expansion phase and it must be showing strength. So pretty much you just mark out a low on the 1 hour or 15-minute chart, and that is your point of interest. And you wait basically for the price to sweep below and initiate a buyback, and then you immediately enter that position. So the reason why this could be a good way to enter into a trade is just due to how close the invalidation point is. The invalidation point is the low, so basically price going below the low that swept out the liquidity, so it's stop loss right here. And with such a close invalidation point, it's really easy to get a high risk to reward trade. So if you just targeted the previous high at 57.4, it would have been almost 3 risk to reward, meaning that it covers for 3 stop losses or 3 losing trades. This sort of entry technique you can sort of see during other phases of the market as well. Right, so like before the pump to the upside, usually we always see a sweep out of lows before a move to the upside. But the issue with that is during consolidation, the price can just come back down and continue consolidating. So I prefer this sort of entry method when price is in its expansion phase and definitely showing some strength. Right, and that sort of entry method, as you can see, does play out quite quickly. So it does fulfill our need to be in a trade for a lower amount of time rather than just waiting around watching it chop sideways. But the risk obviously is that it's kind of lower win rate because we are sort of entering without much confirmation. Right, our only confirmation is signs of buyback on lower time frames. So pretty much price sweeping below aggressively, and then similarly an aggressive buyback to the upside. Right, so 1.5% down below the low, and then within the next 15 minutes back up 2%. So actually we have Neon with us here today as well. And Neon, if you're available to speak, I just wanted to ask you about your thoughts on this week's price action, and in particular, how you anticipated this strong downside move and pretty much stayed safe from this flush out. So are you available to speak, Neon?
Oh yeah, I can. I'm
Thank
available.
you.
So basically, I have posted my data analysis in the watchlist channel, and I was basically looking for flush out before the halving actually, and I'm still not into swing longs because the halving is still, I guess, a month away, and the market has not cooled down yet very much, and I will prefer waiting for almost a month more to start building swings. And the basically way I called this move was strongly based on the database analysis which I have posted, and all of those indicators, all of those data basically suggested me to stay off the market because the market was very overheated and it was far away from its average price. It was overheated and it's still pretty much overheated. And Bitcoin has still not reached its fair value where it should be, which is almost around 59, 58K in my opinion. So that was enough for me to stay out the market because of huge FOMO, crazy funding rates, and overheated data, and all of those things which were clear signs to me. So that's why I exited the market, and I'm still uh, out of swing long, and I'm only preferring meme coins and such coins which do not really look at Bitcoin's price action to perform. It's like Grok, it's a small meme coin, and I also traded Bonk last week. I mean this week. So that's how I basically plan and decide what I'm gonna do in the next week and all of that.
Yep, thanks for that. And definitely, yeah, key takeaway as well is patience. And you definitely do have a lot of patience from what you just said as well. So it's easy to get FOMO and feel like you should be trading all this time if like you're hanging out in chat and see like people posting tons of P&L screenshots, uh, celebrating pumps and things like that. But it's important to remember that in the end, the most important part is keeping those gains, staying disciplined, and basically just not getting wrecked. So the issue with just trading all the time, trying to catch every single pump, is when it goes the wrong way, like in the past few days, it's really easy to get wrecked, get overconfident, mess up your risk management, and in the blink of an eye, all of the gains can disappear. So definitely what Neon said before is quite important. Just basically being aware of the sort of bigger picture, keeping your eye on key data metrics, and just being aware of the risks that comes in these sort of trading environment, right, where a flash out can happen basically at any time. And this week, indeed, we saw quite a few flash outs within the same week. And yeah, Neon posts all of his analysis in watch lists, so I definitely recommend keeping a close eye on that because, yeah, very good and level-headed analysis. So looking back at this post from the 11th, 5 days ago, right, you can sort of see like a few things in consideration for why Neon decided to stay out of large and leveraged swing long positions. So the data suggests that the price is currently overvalued. This just means we can see some sideways movements. So yeah, basically just a few data metrics, a few like price models to sort of gauge and estimate the fair valuation. And we can see that the heat metric and most of this sort of analysis suggests a very overheated market. And you can do all this stuff yourself as well. Right? Finding rates is like a really simple way to identify whether things are getting really overheated. On top of like these sort of price models as well. So I think that's pretty much all I wanted to cover in terms of entry methods, how we should adapt following this week, and basically the key takeaways for trading in this environment. So I'm happy to look over a few coins if you guys want or have any questions. You can post it in the main chat or the live stream chat.
Hello, sorry to cut you off. I will also like to add one more thing.
Sure, go ahead.
Like if you can mark the level of $69,000 and see the price action above that level, where everyone was calling that the market has broke the all-time high and it's gonna go crazy now, which is definitely not the case. And if you can monitor, basically the most of the flush outs and the dips which we have seen in the past couple weeks were mostly in NY session, which was a bit scary and a bit bearish to me as well. So that was a bit concerning to me, and you can see the ugly and choppy price action above the previous all-time high on Bitcoin on the 1 hour chart, and market structure was not really good. And I basically spotted a SMT, which is an ICT technique on Bitcoin and Ethereum, which is basically a sign of institutional distribution, which played out pretty well, in my opinion. And that also helped me to stay out of the market and decide my trades accordingly. Specifically, the NY session selling off and for the past few days was a pretty bearish sign to me.
Yeah, awesome. So pretty much you're saying that the flush outs pretty much all stopped at like the previous all-time high level, and yeah, and pretty much things just leaning towards institutional distribution, right? Right, cool. So I gotta get going pretty soon, but I still have time to look over a few coins. Do you guys have anything on your watch lists? So from what I've seen so far, the large caps like AVAX and Sol have actually recovered quite well from the dump. And if you just look exclusively on their charts 4 hour, you'd see that you wouldn't really be able to see the sort of like sharp move down to the downside from it. So pretty much, if you pick the right altcoins, it may like cushion the downside move a bit. And if you're using low leverage, you can sort of ride out the drawdown. But in most cases, altcoins follow Bitcoin very closely, especially for these volatile moves. All right, so let's look at XRP. Yeah, so definitely quite a lot of wicks and volatility recently. But from what I can see so far, seems to be bullish for the short term. Right, and reason for that is we had these sweeps of equal lows, that price swept below, strong reaction to the upside, and then we just got the retest of that level, the rejection block here, and the price is reacting from it. And also on the 1 day chart, we have the compression and fanning out of the EMAs. And in this sort of perspective, it does seem like it can move a bit higher maybe. So probably for these equal highs at 0.75 over the next few weeks probably. But personally, it's not really something I like to trade too much, just due to how many wicks there are, how it's like often just moving sideways, and it's just really easy to get wicked out and have to just wait too long for something to happen. Sol ecosystem, I think you're probably referring to those low caps. I don't actually look at those too much, so can't really say too much about them. So Casper next. So far, if price can go above 0.143, I think there's a possibility that this move to the downside is just a flush out before continuation. But one thing to note is market structure and order flow has been bearish for a while, since 28th of February. As in, pretty much you can see that the market structure is bearish, making lower lows and lower highs. But for now, we sort of have a power of 3 pattern here. The price can reclaim above 0.143 and hold above. We can potentially see a stronger reversal and move to the upside. So Solana definitely is one of the stronger ones right now. In terms of when this move will stop, it's a bit hard to say, because if we are to look for like resistance levels, right, we'll be looking at, all the way back to 2021, and usually we don't use price levels from that far back because they don't really do much, in my opinion. So fib extensions is one way to project the upside moves. And in this sort of perspective, we can see 186 as the stronger resistance level, and we can see indeed that it has already given a rejection. Given that price has bounced back quite strongly, I think continuation above here is quite likely. But yeah, we can definitely get a few sweeps of lows before that happens. So for instance, price wicking below 166 before retracing upwards. But definitely on the bigger picture, it's quite strong. FET was actually one of the few coins that held up very strongly over the flash out the past few days, so that's definitely a good sign. But in terms of the 4-hour chart, it's sort of in consolidation. So we got the sweep of these lows, so that's step 1 in the entry technique. Step 2 is basically for bullish market structure and bullish order flow to form, and right now it's a bit unclear if we have that. So pretty much just want to see higher highs being formed like that for continuation. So right now it's in consolidation, so no entry for now, because you'll probably be holding the position for a while, waiting for a move, and we don't want to be waiting in the trade for too long, or it can get flushed out. Render actually looks very similar to FET, and I think the correlation is they're both in the AI sector. So perhaps it's a sign that the AI sector is quite strong and resilient, and therefore pretty much should see continuation of the trend. So a similar sort of perspective on Render as well. I can see that this coin likes to do these sweep out of lows before it initiates the pumps, so definitely be wary of that. So it seems that we did have the sweep out, so it seems quite likely that the next move would be the continuation and expansion. So right, so the order block would be something like this. It's a bit scuffed because the bounces haven't really been sustained, right? It moves to 11.5, but like comes back down, so it turns into a wick. we want to see pretty much stronger green candles, something like this here, that actually closes without a massive wick above it. So once we see these stronger green candles and like this order block being respected, any bullish fair value gaps being respected, then that's definitely a sign of an expansion that we can catch. But right now, no fair value gaps and kind of a lot of wicks that we don't want to see. But overall, the next move should be continuation at some point. This one kind of similar to Casper as well, except it doesn't have the power 3 possibility. So yeah, I'll be careful about long positions personally for this. I'm not really interested in longs for where it's at right now. I can go to 546 first before seeing the bigger bounce. Right, it swept this low here, but it can just be a small bounce before it drops back down again. Right, so pretty much what I mean by similarity to Casper is just due to bearish market structure and order flow. Right, it's like forming lower lows and lower highs, clear downtrend. And I said before that we prefer to long coins that are in a sort of immediate uptrend and bullish order flow, just so like we're not stuck in drawdown and we don't have to wait around for the coin to start moving. So on this sort of basis, right, we can see another lower low, maybe around here, before we see the bigger bounce to the upside. So Cody on higher time frames kind of formed a double top, as in it pumped massively in a short period of time, 180%. Saw its heavy retracement, which bounced back, but this bounce back was not able to form a new high. It formed a lower high, so in that aspect it still formed strong resistance at this level, and it can definitely continue to push price downwards for a while. So same thing as well for Cody. Its immediate structure and order flow is quite bearish. We want to see a sort of market structure shift and some stronger green candles before considering ideally long positions. So it definitely can just suddenly reverse and pump to the upside, right? Because we do have these sort of like buy side liquidity lying above here, but the only thing lacking is the confirmation and the short-term momentum. So if we do long this, it might take a while before we see the pump to the upside, and we can instead see a few downside wicks first. But yeah, worth to keep on the watch list just due to the upside targets and how much it has pumped already. So the last coin I'll look at is INJ. So it definitely did seem like INJ was ready to make its next expansion phase move to the upside when it broke above these highs at 45. But the flush out of Bitcoin definitely did sort of stop its momentum. Where it's at right now, it does seem alright, just due to how it held the order block here. And then we also have the previous range highs at 44.87. And if we use the volume profile, we can see that price is holding kind of okay above the value area high, this dotted blue line here. So that's definitely a bullish sign. And with a bullish leading bias on the higher time frames, we can go down to the lower time frames for an entry. So INJ usually kind of moves in consolidation and sudden expansions. So the entry technique I said before about bullish order flow and market structure doesn't apply as well to it. So pretty much the way you can enter trades for INJ is basically just using inverted fair value gaps. So on 1 hour we have this fair value gap here. Price broke above and is seeming to hold above it. So in this case here, we also have this order block that was formed. So as long as price is above 42 to 43.5, we can probably see it continue to move up. And then we have a 4-hour fair value gap here as well. So what we can see in the short term is perhaps just some retracement in the 4-hour fair value gap down to the order block and then move back to the upside. But definitely should be looking for longs overall in INJ. Right, so that's about it for me for today. Thank you guys for listening in. Hopefully you guys found this stream useful. It will be uploaded to YouTube if you want to review anything that I went through today. But the key takeaways today just have to do with entry techniques and basically the thought processes and how we think about the bigger picture in these market conditions. I'll have the stream schedule released tomorrow. We'll have more streams running next week, and I hope to see all of you there again soon. Thank you very much, and have a nice day.